Harmony Gold has agreed to sell its Evander mine to Pan-African Resources for 1.5 billion rand. Pan-African is set to double its annual gold output as a result to 200,000 ounces per year with the acquisition. Joining us to give us a bit more on this, we have Jan Nelson, who's CEO of Pan-African Resources. Hi, Jan.
Hi.
This, before we talk about the numbers of the deal, it's a different deal to what was looking likely earlier. You were in a consortium with Wits Gold. Now that's fallen away and you're doing the deal on your own. So what happened there?
I think that the consortium couldn't reach agreement on certain of the conditions precedent that we had to fulfill for the deal. And as a result of that, the consortium decided that it wouldn't be possible to continue. And each party then made a separate offer to Harmony, and luckily our offer was accepted.
What were those conditions precedent? And I suppose whatever conditions precedent there were in your offer that was accepted, it worked. What went wrong? Why couldn't those conditions be fulfilled?
Look, I think the two companies obviously are very separate companies. One company is a production company, one company is an exploration company, and I think the two companies had different views on, for example, how to structure debt, risk management and so on. And there's not a right or a wrong there. It's just, different companies have got different strategic ways of looking at things, and we just couldn't reach agreement on certain of those aspects. And, we don't want to get into the detail of those. And then obviously we saw that if we couldn't reach agreement on those, it would be very difficult to then try and manage an asset like this together.
So obviously the price would have been higher for you, presumably. 1.5 billion, that's a nice round number. It's a nice big round number. How do you intend to fund this?
Well, we will obviously do it out of a combination of debt and equity and cash flow that we have on the balance sheet. So we have already got firm term sheets from some of the banks in South Africa on putting about approximately 500 million rand of debt ring-fenced on Evander. Obviously, that then brings the price down to 1 billion rand. All the profits from Evander also accrue to us from 1 April until closing, and we project that those profits will be in the region of about 200 million rand. So that leaves us about 800 million rand that we have to do out of current cash flow and equity, and we could put about 300 million from current cash flow towards the transaction, which leaves us with about anywhere from 450 to 500 million that we will have to get through equity raising.
Now, Jan, you call it a high-grade, high-margin, quality asset at the low end of the cost curve. There can't be too many gold assets in South Africa remaining that meet all those criteria. It's almost too good to be true, or sounds like it.
No, we agree with you, and myself and a few of my management people have worked on Evander, and that's one of the reasons we know it well. But in terms of the high grade, the shaft that we're buying, the production shaft at Evander 8 shaft, has got a resource of 8.5 million ounces at 11.6 grams a ton, and the extension of that resource is another 11 million ounces running at 10.74 grams a ton. So we like assets like those, very similar to our Barberton operation, which is also running at 10 grams a ton. And the advantage of these type of assets are that when the gold price does go down, and with rising inflation, if you've got that margin, then you're able to operate profitably. And that's why we like this asset.
You mentioned the gold price, and there's been talk that it may have hit a peak. It's sort of bumping around where it's been for the last couple of months, but hedging has come back into the conversation around mining on the assumption that it might go down again. So you're looking at 200,000 ounces, which is double production. You've paid 1.5 billion. You must have made some kind of bet on where the gold price is going to be in the next year or two.
Well, look, look, we will have to hedge about 25% of the production at only Evander as a condition of the debt terms from the banks. But, we want to remain unhedged other than that, where, we have to do it as a condition of the debt agreements. But other than that, we will focus on the things that management can control. I can't control the gold price unless I hedge, and our view is that we're not commodity traders, we're miners. So we need to focus on productivity improvements and making sure we've got the right management teams, and we're getting a great management team at Evander. And then if you buy a good ore body, then you've got the margin, even if the gold price goes down. Because the things I can tell you is that at some point gold will go down. We're happy when it goes up. I can tell you that mine inflation is going to go up, and there are times when your team at the mine gets it wrong. And the only way, in our view, that you can you can overcome these difficulties is if you have margin. I think if you bet everything on the gold price, then you're going to get into trouble.
Well, I think you're the first miner we've talked to in a long time who's talked about hedging, even though it is under compulsion, as you say, from the bank. You talked about funding through equity. Are we looking at a possible rights issue down the line, and how much of a dilution would that be for shareholders?
Yes, we don't expect, if we were to do a rights issue, we don't expect the dilution to be more than 10% of the market cap of the company. And we think if you look at the earnings accretion that will happen as a result of this transaction and the doubling of the production, we think that's not unacceptable dilution for shareholders. We are obviously now engaging with our institutional shareholders, and we'll also go around and talk to our retail shareholders to find out their views. But we think that's an acceptable limit in terms of this type of transaction. It's a big transaction. It doubles virtually our production profile.